Good day, everybody. It's Greg Schnell, and I am here with your Daily 5. So the first chart I want to talk about is the S&P 500. It's at the 200-day moving average, which I didn't show on this chart because I'd have too many lines going on. But the point I want to make is that on the previous peak in March, we hit the 200-day and fell down, or around the 200-day and fell down. And in August, we basically touched the 200 and fell down. So here we sit up against the trend line, up against the 200-day moving average, and the VIX is right at the low end of the range. And what we're watching here to see, you can see we kind of bottomed out in February in this level, in March, April at this level, and in August at this level. So we just want to see if the market actually has the power to change the direction, or if we're at the end of a bear market rally and we want to watch and see. So when I look across my charts, I would just say that we're at the upper limit of what we would call a bear market range on a lot of the indicators. So, and don't get me wrong, I have so many charts that make me want to jump on and be bullish. The big issue I've got here is we've already been rallying since October 13th. We're 6 weeks in, and we haven't really seen a lot of buying yet. What's gone on is we had a 2-day thrust on the back of the last CPI number where the market jumped up almost 10%. And other than that, we've been in a relatively tight daily range. We just kind of keep oscillating back and forth, but we had that real short covering rally in there that made the chart look like it's really gone up a lot. But I would just say in there was probably more short covering than buying. And we've really had the volume drop off lately. So I want to be careful here while we're at the top of the range. So one of the other charts I like to look at, and this is just really big picture, but it's the 5-day total of the net new highs. And what does that mean? It means when you add up all of the new highs minus all of the new lows, you have a difference. And when that difference is positive, you're typically in a bear market. When that difference is negative, you're not. And so we have had these big spikes down. This is not uncommon, but we're right up near the top of the range. And so you can see this horizontal line I've got just hiding in here. That's at around minus 350. Or 3.25, and what I'd like to say here is we still have more net new lows than new highs. So we're very close to breaking out to the upside. And if I zoom in a little bit on this chart, the August peak, we barely just got positive and then reversed. So I'm watching this data closely because once you start making more new highs than new lows, you're definitely trying to change the trend, and that's what we want to watch for. When I look at some of the other data I keep track of, over the last 2 weeks, we've had 1,200 stocks move down more than 5%, and we've had 800 stocks move up more than 5%. So it's a real bull-bear battle here as we're trying to figure out which way this market wants to go. One of the other things that happens is when we have the US dollar change direction, it can also change the posture or the look of the rest of the world. So if we look at a chart like EWC or EWQ or EWG, those charts are the US dollar version of a foreign market like Germany or China or Canada or France. And so when we look at these charts through the lens of the US dollar, if the US dollar is down, those charts actually make quite a nice push higher and look really good. So I always like to look at them, other country charts in their own currency. Now I don't have that for the emerging markets, but the point I would make is the emerging markets broke through this downtrend and have sat here for 4 weeks. You can see it on the Zoom panel, and just hovered here. Now we're still below the 200-day or the 40-week moving average. That's a real important resistance level for me. And so if we can finally break out, I think that would be a really good sign that some other things are changing around the world. Now, let's just say the US dollar continues to soften, well, we should see all these other world charts breaking out, and in their own currencies, like the German stock market and the French stock market, they've been breaking their downtrends, which is really nice to see. So that would suggest to me that the US could do the same. The real difference here is we still have the Fed fighting inflation, whereas the central banks in Europe have talked about being a little less monetarily severe in their policy. And so we might just find that the US market has more pressure because of where the Fed is at. The next chart that really comes into question for me is if the economy is actually going to start turning up. We have all kinds of reasons to suspect that commodities should be in demand, and yet even with the dropping of the US dollar, commodities have been unable to rally. We've seen a little bit of a heartbeat out of gold and silver, but for the most part, copper hasn't done anything. Crude oil hasn't done anything. So we're seeing a lot of different charts that, normally when the US dollar kind of lightens up, you'd expect these charts to go positive. Now, it doesn't have to happen on the same day, but it's been weeks and we haven't seen a real response yet. So one of the charts that I think is more interesting to show you than a daily or a weekly, which I'm sure you're familiar of, crude oil, is this chart, and each year is one price bar. And so what you see on this chart is on the back of the Ukraine invasion, we saw crude oil surge up to $130, but it's actually back to unchanged. And I'm recording this on Monday for Tuesday. And in pre-market trading this morning, crude oil actually went negative on the year, which means it closed below the high of the prior year, or the close of the prior year. So we're sitting here watching crude oil, which is really a great economic indicator. And even in the face of what we think is tight inventory worldwide, we've watched OPEC tighten oil output, and crude continues to fall. OPEC meets early in December. And we also have I think they're actually meeting the day after the price ceiling for Russian oil is going to be set on December 5th. So we have a lot of turmoil coming up in the oil markets next week. And it's probably something that we should be very aware of how all that works out. I would just say that if crude oil is near its lows for the year, it's probably a better place to try to get long than try to get short. But at the same time, it's not giving me any signals that tell me I should be getting long yet. And so I want to still be careful in this space and use crude oil to help us a little bit with understanding the economy. And the last thing I've got is the overall commodities chart. And one of the problems we have on this chart is we literally made a big outside reversal bar on a monthly chart earlier in the year. And that's been a real clue. And you can see each month here, we try to rally through the month and then fail, try to rally and fail, try to rally and fail. Now at this point, we still have rising lows over the last 3 months, but we're always at the low end of the price bar at the end of the month. So I'm really wondering if we have enough upward progress to actually hold commodities, or are we going to start breaking lower? And if commodities start to break lower, I think that's a pretty good economic indicator that we need to be more aware of. And crude oil was one of the clues on the back of COVID, or before COVID. And back in 2014, when we had an abundance of oil, it fell in there. And we actually ended up with the stock market making its low in around the early January 2016. I think it might have been the January 24th or 25th. And literally watching crude oil come down and hit the bottom there was one of our better clues. So I don't want to ignore the clues from oil. I think they're very important. So I don't have a lot of ideas to buy right now, and one of the reasons is because we're really at that pivotal point, and I'd rather protect my capital. So if you'd like to see what we do over at Osprey Strategic, head on over there and look around the website. Our big focus is on protecting capital, and again, we're still in a bear market until things change. But when it does change, we've been pretty accurate. We've been able to hit the lows in October to the day, and try and buy those lows. And so we don't know what the future brings, but we can keep watching the data, and as that data turns and rotates, we try to stay on top of that to make sure you protect your capital. With that, I'm going to let you go. Good luck and good trading. Best wishes. Thanks, everybody. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.